Today's session, we'll be focusing on what most founders, SMEs, and companies in Singapore would have to comply with, and this is with tax. Now, in Singapore, there's various forms of taxes. You can see from the slide, we have corporate tax involving company taxes. GST, goods and service tax, is basically tax on your transactions. We have withholding taxes also should the company need to withhold tax to pay on consumption of foreign services performed in Singapore. Stamp duty for transfer of assets and shares. Property tax, if you own an investment property, you have to pay tax on this, and personal tax. But primarily today, we'll focus on the two main taxes involving most companies, which is the corporate income tax and the GST. Next slide, please. Okay, we'll come to GST and corporate tax. GST is a goods and service tax. It's more like a consumption tax. And this GST, there is a registration process for a company. Now, if you start up as a company from square one today, the registration is not mandatory. It's only mandatory if your transaction volume crosses $1 million in one calendar year. And this transaction volume has to involve in taxable supplies, means your sales of goods and services within the geographical location of Singapore. If your sales is beyond Singapore, if it's not more than 1 million, if it's the sales outside Singapore is 1 million, but the local sales within the confines of Singapore is less than 1 million, you can treat it as non-taxable supplies. So even though it costs $1 million, you have a choice whether you want to register for GST or not register for GST. Okay, for companies that want to register GST below the 1 million mark, you can do so by applying for voluntary registration. Of course, voluntary registration is subject to the Comptroller of GST approving your application to be registered. Now, what happens is once you've registered, you have to comply with the submission basis. Most of submission bases are on the quarterly basis. That means, and this quarter basis follows your financial year. Financial year is not your calendar year. For example, some companies may start the financial year in July and in June. In that basis, the quarters follow the financial year. It means to say that from July to September, it's the first quarter, October to December is another quarter, right? There is some times where your GST quarter follows a monthly basis, but that's when your transaction volume is large. And but normally for most SMEs, your reporting quarter for GST is on quarterly basis. Now, for corporate companies, if you're active in a year, filing of taxes is mandatory, right? So despite being a dormant company or not dormant company, you must file taxes, except if you're a dormant company, you must apply for a waiver to file your corporate taxes, right? In this case here, if you file a waiver, you will get a reply letter back from the IRAS, the tax authority, and with that waiver letter, it says that you are exempted, and at the time you do not need to file your the corporate tax on an annual basis. However, once you are active again, once you start generating revenues and profits, you have to then request to recommence your filing, and this is your obligation as a company in Singapore. Next. So once you're registered for GST, your GST period is normally on a quarterly basis for most SMEs or monthly for large companies. The filing timeline is normally 1 month after the GST period. So for example, if your GST quarter is from January to March, your filing period will be by 30th of April, 1 month after March. If your quarter is from April to June, your filing period will be, your deadline to file will be in July, right? As for payment of GST, that's a separate issue. Normally, if you register for GST, you need to then submit this GIRO form. Basically, it's a direct deduction from your bank account. For these cases, the GST will be deducted normally on the 14 days after the so-called the filing time, right? But if you do not have the GIRO form submitted to IRAS, the payment date will be exactly on the 1 month, 30th day after the GST period. You have to pay your GST. So it's good to go for the GIRO plan. You've got extra 14 days, so-called cash flows, right? Next, for corporate tax, your basis period will be a financial year basis. So this will follow your what you set as a financial year end for your company. Typically, you have to state this in your incorporation documents and then notify IRAS when's your financial year end. Or if you don't notify them, after you file your first so-called your first tax filing, you have to fix your financial year end, and thereafter IRAS will follow it for every 12 months. So what's a financial year end? Like I said before, calendar year end is January to December. Financial year end can be a different date. So for example, if your financial year is from July to June 2023, your tax filing will be in the following year in 2024 for that financial year ended June 2003. So very simply, if your year end ends in 2003, your tax filing deadline will be in 2024. Okay, there are two filing deadlines for corporate tax. One is called the ECI, which is called Estimated Chargeable Income. This is typically, you need to file it 3 months after your basis period. It means 3 months after the end of your financial year end. And this is mandatory only if you have profits, chargeable income. If you have losses or negative chargeable income, you are not required to file. It's optional to file. You can still file, but it's optional, right? Typically, as a chartered accountant, I do advise people to continue to file. Reason being sometimes IRAS would not know whether you're profitable or you're making a loss. So if you file, if you're a loss position, you're telling them that you're no tax payable. If you do not file, IRAS can still have a right to deem you have tax and then send you a notice assessment. And if you do not object to that notice assessment, you would then have to pay the ECI notice assessment that they deem on you within 30 days of receiving that notice. So it's advisable to file to just let you know that you have no profits. Okay. As for the final tax, it's called Form C or Form CS. Form C is just a text name for the final tax form. Form CS is basically a simplified version of that full tax Form C form. Right? Now, this final tax Form C and CS is typically filed in the next calendar year after your financial year end. So like in 2023, if it ends in any month in 2023, you would file in 2024. Typically, usually when there's a budget in the next year in February or March, IRAS will actually then reprogram the submission gateway, and they may open it between May, June, July. So last few years, they've been opening up a bit earlier when there's not many changes into the budget of the year, right? The Form C is normally ready by May. And you can wait for announcement in the IRAS website when this form is ready. If not, normally be ready by June, okay? So more importantly, when's the deadline to file the Form CS? The deadline is on 30th of November in the following year, all right? But there's a concession. IRAS has now so-called progress to this thing called Approved Software Register Plus, okay, filing system. There are 8 software that are tier 3 that can cater to corporate tax filing natively from the system. If you are subscribed to those programs, they give you extra 14 days. Means your deadline will be 14th of December, right? So it's encouraged that people look at the ASR Plus system, those software that are tier 3, and if you want to have the extra grace period of 14 days, okay, do consider engaging these systems for your tax filing requirements. Coming back to the bare basics, to prepare for taxes, right, you would then need to aware as a business owner, what are the documentation required by IRAS for you to keep to support your GST as well as your corporate tax submissions, right? So IRAS came out with this scheme. It's called Simplified Documentation, okay? It means to say that if your business or company has a revenue of less than $200,000 financial year, you are only required to keep your listing of sales transaction, listing of cost and purchase documents. These are basically manual records you can record in an Excel spreadsheet, but you got to list it according to the template provided by IRAS, all right, in their website, right? So you can go to Google, look at IRAS website, and say basically what is business records required to be kept. So if you look at that, they will actually give you a template, and a template the record according to those requirements. Now, this Excel spreadsheet is for people who don't have accounting systems or transaction recording systems, but it's really encouraged that you get a system-generated software that can keep track of all this documentation. So it not just helps you to keep do your invoicing to your customers, you can also then record your costs and expenses. So what you need to then generate if IRAS asks you for documentation is just to give you a listing of all the sales and listing of all the purchase and cost transactions. That'd be sufficient for your requirement. Okay. Now, if you if you have turnover more than $200,000, then you need to be the list of documentation is more robust. As you can see here, you need to keep the actual sales invoices, the credit notes, the actual purchase bills, expense receipts, rental agreements. If you have any loan agreements, loan statements, bank statements, finance lease contracts, as well as import-export documentation, these are to support the entries into your so-called your accounting records. Okay, and the formats permitted by IRAS are both digital as well as physical documents. So yes, you can actually scan your documents and you can keep it, right? So you can keep a physical and digital copy of your documents. But more importantly is that it's that when you do a scan, just make sure you do not alter the scan. It's honestly, it's an honest scan of the original document, and there's no fudging of the numbers in those documents. Those documents can be fake, right? Okay. Besides those documents, you are asked to keep also your fixed asset purchase and sales schedule. These are basically sale of your capital assets. Okay, and keep an audible trail of accounting records linking back to the supporting documents. So if you have a accounting system and you have a manual filing system, literally there must be a reference number to trace between these two systems if you're using traditional accounting softwares. Okay, but today there's a lot of new softwares whereby the systems are linked to a documentation system. Then there is an actual physical link between your accounting records or accounting systems to the digitization e-document management system. Right. So more information on this can be in detail can be found from IRAS. IRAS has did a very fantastic job of providing FAQs and questions on the site. So we encourage those people who are new to businesses and companies. You can approach us, or you can look at IRAS website to get further information. It's very robust and well documented website. Now, IRAS has promoted this thing called ASR Plus. Okay, and tier 3 means to say that you fulfill 3 requirements. Tier 1 means you fulfill 1 of the 3 requirements. The 3 requirements are below is that 1, you can actually prepare Form CS and file Form CS directly from your accounting software, native platform directly to IRAS. Second requirement, you can actually prepare and file your GST, your original Form F5 and F8. For those who need to know what's F5, F8, you remember the quarterly submissions? Those are called Form F5s, right? Form F8 means it's the last quarterly submission. Same thing if it's a monthly submission, then it's called Form F5 for the monthly submissions. F8 basically is your last submission. F8 is meant for the day that you no longer want to be GST registered, so that's your last submission period, okay? So basically they are the same, right? And next one is your company has also be created under Invoice Now. Okay, this is under IMDA, separate organization. So any softwares that comply to these 3 requirements, IRAS will grade you as a tier 3 ASR Plus software. Okay, currently there are only 8 softwares under tier 3. Next slide. These are the 8 softwares: Automate, AutoCount, Count2, Metro, Yongyo, OCI, Netiquette, and Zeta. So the history was back in 2009, IRAS launched this program. It's called Seamless Filing. So at the time there were some pilot studies, and the companies that went in were AutoCount, Netiquette, and these 2 companies, right? And Count2 also. Subsequently, in last year, 5 softwares were created by IRAS in the second batch, which is Automate, Metro, Yongyo, OCI, and Zeta. So for these softwares here, they've all been pretty robust softwares, and we encourage people who want to look at integrating their accounting systems, platforms, together with filing directly to IRAS. I said before, there's a benefit, right? For Form C, you've got extra 14 days added to your deadline to file if you file from these 8 softwares.
what's the difference between ACRA, IRAS, and IMDA? And a usual case is where when I incorporate a company with the CorpSec, they say that the accounts is also done. So if I have to do it, say as a DIY basis, how does that work? Like, how do I ensure that it goes to ACRA, it goes to IRAS, and what's the role of IMDA here? If you can just clarify it, I think it will help the audience.
Okay, so I think I can clarify it if there's actually a slide that you have we do on the last part in terms of preparing your documentation, but I will repeat here first before we go to the last slide after the demo. Okay, so for all companies in Singapore, you are required to be accountable to IRAS. That's for basically GST and tax purposes. GST is optional. If you are registered, you must account for GST. If you are exempt or you are below the threshold, you need not register GST, then you're only responsible for filing your corporate tax. ACRA is a different department. ACRA is something like company houses in UK. It's basically a institution government. It's trying to execute the regulation regarding the Company Act. So one regulation, you must actually execute a general meeting by all shareholders, right? All right, and that's according to some of the requirements. But after the general meeting, every company to file annual return. The annual return basically to state that who are the shareholders, directors, the particulars are updated in ACRA, and that such a meeting has been conducted and has been filed. Now, filing of this annual return comes with some additional requirements, particularly if you're type companies. If you're a non-exempt company, okay, you're a private company or public company, you must file also your annual reports in XBRL format to ACRA. Okay, but if you are exempt company, these are companies, smaller companies, less than 20 shareholders, no corporate shareholder. And if you two conditions, you need to file only mandatory if you are insolvent. Means to say that you can't pay your debts, your assets, your liabilities more than your assets. Okay, you must file your annual report plus XBRL format to ACRA. However, if you are solvent, you have option. Basically, they won't require you to file. You have option to file. Okay, they don't say you don't have to file. They just say that you have option to file. So these are the two main institutions that you have to file for your company accounts. Okay, one is to ACRA. Only if you have met the requirements, you must file. For IRAS, you need to file corporate tax. Now, IRAS also require you to file your annual report and your tax computation on request basis. So you still have to prepare your tax computation and your annual report, stand by, keep it. But if they don't ask you for it, you don't have to submit. Right? Okay, so these are the two institutions. As for IMDA, IMDA is basically Infocom Media Development Authority of Singapore. They have to promote digitalization in Singapore. So the Purview Invoice was one of the projects undertaken by IMDA. They have actually a lot of projects they are undertaking, but these are three different institutions. I hope I answered that question.